able to attend. All right. And so first I would like to introduce Alexis McDowell. She is the SEDP Investor Relations Manager who joined us just a few months ago. So I wanted her to be able to introduce herself, maybe say a few things to you guys, and then we will introduce our presenter and get started.
All right. Thanks, Jody.
You're welcome.
Whoa. Sorry, I just hit my desk. Jody said, my name is Alexis. I grew up in Shiawassee County. I've known Justin for about 10 years or so now. I graduated back in May from Northern, new investor relations manager. I've been trying to stay on top of creating relationships or even grow more relationships within our investments and, upcoming investors as well. I know Kevin very, very well by now. I feel like I've seen Kevin a lot recently. But just to create more relationships within the county and outside of the county to bring more to Shiawassee, to grow Shiawassee, and hopefully grow. That's all I got. But try to be affiliated with a lot of stuff. Kevin, I actually spoke on Farm Bureau last night, so I was kind of excited about that. That was more of my generation there. And try to really connect within the smaller communities, especially government outreach within the smaller townships, especially my area since I'm south of the county, basically Livingston County. But yeah, just grow those relationships. That's kind of why I'm here, and help our team grow as not just ourselves, but grow as a team.
All right. Thanks, Alexis.
Yep.
So I would like to introduce Mary Freeman, the Chief Executive Officer for Lena Green, Michigan. She will be our presenter today. We did talk a little bit before the webinar started, and she said that she's going to keep this pretty informal, but if you want to wait, she'll go through slides and then answer any questions. We can have some discussion after the slides. And kind of an interactive talk so that we can answer any questions that you guys have. And that's about it. So welcome, Mary. Thank you for joining us today.
Thank you so much. Let's see if we can, if I'll be able to do this to see if people were to put into the chat whether or not they've ever heard of PACE before. I think that would be fun for me.
Okay.
Just yes or no. PACE's biggest challenge typically is people understanding it and knowing how to use it. And once people learn about it, they're like, hey, how come I didn't know about this before? Oh, wow. So this is fantastic. Well, that's because Justin is such a fabulous communicator. He has been a promoter of our program since you all joined in 2020, and has just kind of tirelessly steered people our way to talk to them about their projects, to talk to them about this financing economic development tool and how potentially they could use it for either a retrofit or gut rehab or even new construction. PACE can be a part of any only commercial project, or it could be residential, but it has to be a multifamily building with 4 or more apartments. So some states do have residential PACE, and Michigan is not one of them, but there are 40 states that have PACE, which is property assessed clean energy programs, and only a couple that still have residential programs. And the commercial programs have really taken off, and all the ones around the country, we've all learned from each other. We're part of study groups, and we share information, and we do all kinds of things to try to make PACE more accessible to local business communities. So I'm going to go ahead. I'm going to run through just like 10 or 12 slides. It'll only take me like 10 minutes or so. I'll probably overwhelm you with information, but if as you're watching, if you can just jot down any questions you have, and then we can have a conversation at the end. I'd love to hear what kinds of projects you all are involved with. If you know of any projects that are getting started or that people are working on in your area. So I will go ahead then and talk about property assessed clean energy. So Lean and Green Michigan was created a couple of years after the PACE statute was passed in 2010. So we started this this effort in 2012 to bring the state statute to life because there was no funding behind it, and so local governments were not going to be in a position to take on developing their own PACE program. So we decided to create this model where we would administer programs for local governments all around the state, like a uniform program that was efficient and open to everyone, but it would relieve the local governments of the burden of running a new program. So we connect commercial property owners. If I can get rid of this. We connect commercial property owners, private lenders, and local contractors. We see projects through from beginning to end, and we work with those projects to figure out how the property owner can voluntarily place a special assessment against their own parcel or sometimes parcels so that it becomes a secure interest for a lender. And it looks kind of like a tax on the tax bill. I mean, the special assessment does appear on that property, not a tax to other people, but for that person. But they make their payments directly to the lender. So there's no cost to the local governments, no administrative burden. And we've been able to successfully bring 59, in fact, local governments into the program. And I'll talk about that also. Oh, doesn't want to go to the next slide. Let's see. There we go. So we have 59 municipalities, and you can see that you all are right in the thick of it there in terms of who has joined. 75% of Michiganders and probably 85% of business-to-business locations are in a Lean and Green Michigan PACE district. We did add, about five districts a year for a number of years, and that's slowed down a little bit, and because we're focusing more on administering in the places where there is more activity. But like yesterday, I drove out to Berry County and presented to their committee as a whole about PACE, and they're very interested in it. They have a project that's going up in their downtown Hastings that wants to use PACE. They need to become a PACE district before that happens. And so I think they're going to go through the process, and hopefully they'll be a PACE district within a few weeks. So the eligible properties, I mentioned commercial properties, they have to be privately owned, no government properties, could be industrial, agricultural, retail, office. We've had churches, YMCAs, hotels, many multifamily, and probably the most popular use of PACE is for senior living facilities. We've had probably 20 who have used PACE to finance a new construction project, and they can use all kinds of things like low really highly efficient HVAC systems, LED lights, low flow toilets and showers, etc. So what PACE does is bring this funding, the private capital for these improvements. They have to fit into these categories. It has to be energy and water efficiency. It has to be or renewable energy or an environmental hazard mitigation or a combination of those things. The interest rates are fixed. It runs with the 10-year T-note, so it's not a discount or a grant or subsidized in any way, but it's market rate. The property owners get 100% up front for up to 25 years. Jody, can you hear me okay?
Yes, we can hear you well.
Okay, good. Yeah, okay. I just realized I'm talking to my screen, and I don't know. All of a sudden it occurred to me that maybe you guys can't hear me, but you can. Okay, fantastic.
You're good. Yep.
So this lending security that this special assessment creates is very, very appealing to lenders because it's secure. It's a long-term investment. They do a lot of work to ensure that whatever the project is on that property is something that's going to be able to be in business for not necessarily with the same owner, because it can change hands and the PACE loan would just go with the property, but that project is going to be operational for a period of time. So the improvements make the property more efficient, cost effective. It increases the property value and of course creates high quality jobs for local workers because there's just a lot of contracting that needs to be done to make good use of your loan. So here's some of the eligible improvements. I've mentioned some of them. Oftentimes PACE is part of a larger capital stack, but it could be that you could just use PACE for whatever improvements you were making and not have other financing sources. We do encourage people to access, any rebates that you can, any grants that you can. PACE often will come in after people have gotten some of those things in place to add to their capital stack. Environmental hazards was new. You all updated your program report to recognize environmental hazards as an amendment to the state statute that was added this year. So it's mitigation of pollutants such as lead, PFAS, and other harmful substances in drinking water, and protection against the effects of severe weather such as drought and flood. And the last one, anaerobic digester, is specifically called out in the state statute, and we have had a slaughterhouse who spent several $1,000,000 installing an anaerobic digester, and now 95% of their energy comes from the waste of their animals, and all the methane that they were putting into the air is no longer. So the local community no longer has those smells to contend with, which is a huge benefit for the community. I mentioned this. PACE does fit with tons of other financing sources. I don't think I mentioned brownfield TIF or historic tax credits. Recently, we got approval from HUD. If there's a HUD-backed housing development, in Michigan now we're one of 6 or 7 states where you now can finance with PACE in a HUD. So, oops, let's see. Oops. I missed one slide. Let me get back to it. There we go. So this is statewide market data. 87 PACE projects have been financed since 2015. So this is not something where you're talking about a dozen, maybe a dozen a year, in the whole state. We'd love it to be more. There are all kinds of reasons why it wasn't until 2021 that projects really started closing. So that number 87 represents really the last few years. $308 million in private investment into the state, and then obviously many, many savings and jobs created. I'm just going to share. You can go onto our website and see all case studies for every project, and you can filter them by county, by year, by asset class, etc. But I just put a few out here. This is the Dexter Hotel in Antrim County. Stellar Residence Inn in Grand Traverse. Grand Traverse has had about 9 or 10 PACE projects be realized there. It's very popular there. Ottawa County had a church that borrowed money for PACE. Romulus Self-Storage in Wayne County, and also the Samaritan Center, which, hold on. The Samaritan Center, it was a hospital and it's been transformed into a multi-service agency, and they are doing a huge retrofit to make sure the building is going to be saving them tons of energy going forward. This is a little bit of detail about the Senate bills that passed that went into effect in February of 2024. In addition to the environmental hazards, there's a couple of sort of technical things that make PACE easier for property owners. One is that they used to be required to have a savings guarantee to pay for a savings guarantee for their project. And now if they want to, they can waive that. And new construction projects are now required to be built above code, but do not require the savings guarantee. And that is my presentation. So let's go back here and I'll stop sharing so I can see you all again. So that's just a quick overview of PACE, and probably not enough to uh, really see how it could happen. But I don't know if anyone initially has any questions, or if there's like a certain type of process that I could describe, and I'd also love to hear what kind of projects are going on in the business community here in the local community, that maybe you could send them our way, and we could talk to them about PACE. We usually do it like a 10-minute phone screening just to see if people are eligible. Super easy to do, gives people an idea of how to access this private capital.
It looks like Joe has his hand raised.
Hi, Joe.
Yeah, thanks. Thanks, everyone. Hello. And I see there's a couple questions in the chat too, but yeah, I'll hop in. Thanks, Mary, for the presentation. I was wondering if you could kind of walk us through from the person who would be applying for PACE financing. Can you just give me, if I'm interested in PACE, I'm in a PACE qualified district, how would what are the steps I take to get PACE financing?
Oh, that's a great question. So sometimes people will send us inquiry through our website, just as example. So they'll send us, we do a little just ask a bunch of questions, and then we immediately, as soon as we get one of those, we call that person, and we'll walk through and say, okay, well, is this a government-owned building? No, check. Is this is the owner interested in this? Like, it can't be the owner would have to sign, that person who actually owns, because it is a special assessment against their property. So, people who are like agents or things like that, we kind of caution them in that regard. We talk about the kinds of improvements they're interested in. We talk about, obviously, confirm whether or not they're in a PACE district. And if it seems like the project could potentially be eligible for PACE, we will do give people one of two options. We'll either refer them to a contractor who can do an energy audit to give them an idea of specifically what technologies could be installed, let's say in a retrofit. Or we might, if they're a little bit farther along, they already have a contractor or they have a very clear idea of what they want to do, we might refer them to a handful of PACE lenders to call them and talk to them, explain the project to them, and ask if they can get a term sheet. A lot of times, people will get several term sheets so they can compare interest rates. And then there's either way, if you go to the lender first, you still have to get that official energy audit to meet the requirements of the state statute, and that would tell what the savings were going to be if you use these specific technologies. And the most popular ones that people finance through PACE are like, large HVAC systems or insulated roof, new windows, permeable parking lot. EV charging stations are eligible, so most of the new hotels and multifamily apartment buildings have wanted to install an EV charging station. Let's see. People come up with all kinds of things changes that they would like to make or improvements, as long as it saves on your utility bills. That's kind of the marker. Now with environmental hazards, there's a different system of kind of assessment, and so it's like looking at both the site and the local community to see how ready they are for, let's say, flood. So that's kind of a new uncharted territory in Michigan. Other states have done a lot with resiliency, and so we're learning from them and we're using some of their tools. So yeah, so it's figuring those things out. And then once the deal closes, the money is 100% put into escrow so that the contractor can tap it right away. It's one of the things that's nice about PACE. Other kinds of financing, you might have to do the work first and then get reimbursed. PACE gives the money up front. The loans are for 25 years at a fixed interest rate. And so it spreads the payments out over, almost 5 times what you could get in a business loan. And that's one of the attractions. It makes it more affordable. And typically people are, especially, with a retrofit, you can really see that the savings that you're getting from the equipment outstrips the payments. It's better than the payment. You're saving more than what you're making on your payments. So, there are buildings that, spend $65,000 or more a month on electricity, and it could be 3,000. You can really save a ton of money if you have good equipment. That was a long answer to a very good question.
That was super helpful. Thank you for that insight. And a couple quick clarifications. You mentioned if you're going to if you're at the phase where you're referring them to PACE lenders
Yes.
to start the term sheet process, that they might get several quotes because they could compare interest rates. Will the rates be different? I thought you said it's tied to the Treasury, the 10-year Treasury note.
Yeah, but people will compete for your business. So
Okay.
yeah, it is tied to the 10-year T-note, roughly. But they might be a point, maybe a tenth of a point, difference or something.
Okay. So that's worth doing.
And then most people people are of two minds. They'll either say, "Can you just send me to the lender that's most likely to like my project?" Or they'll say, "I'd like to shop. I'd like to do some, I'd like to feel like I've kind of shopped a bit." So people do both.
Okay, that's super helpful. And my last little clarifying question was, do you see any risk, Mary, to this funding stream from the federal administration change? Like, have you heard anything? Is there any chance these funds go away? Or the program goes away, I guess?
Right. So there's no government money at all in the private capital for PACE. So I mean, this is going to affect everyone, because of even supply chain stuff and, contractors getting materials. Who knows what's going to happen, but from a financing perspective, it's completely unrelated.
That makes sense because there's no
Yeah,
federal money.
a lot of the national lenders, they tap like retirement funds, annuity funds. That's where those kinds of entities, like massive entities, love PACE.
Okay.
They love PACE because it's very predictable and it's very secure. And so it's easy to access private capital.
Got it. Thank you for answering the questions.
It looks like Alexis and Kevin both have their hands raised also. Alexis, do you have a question?
Just a quick question. What slaughterhouse did you actually work on, so I can kind of look at that? Because we actually were talking about slaughterhouse last night at the Farm Bureau meeting, so I'd like to get some insights on that.
It's JBS. It's on the border between City of Wyoming and Kalamazoo County. They actually had to do, because the slaughterhouse is it spans the border there. So they had to do a PACE project on each set of parcels. So they had one in the City of Wyoming and one in Kalamazoo County.
Gotcha.
Yeah.
Thank you.
Kevin, did you have a question? Maybe we'll go to the chat first.
Here we go. There we go.
Oh, sorry. Go ahead.
I had
a mute situation.
One is there a checklist that we can look at that would save us time? I mean, if we're working with clients and we want to put them in touch with you, there might be like 2 or 3 questions that disqualify them right away. Is there a short checklist that we can use before referring them to you? And then secondly, this locks it in for 25 years. Can those then be refinanced if interest rates go down?
So if interest rates go down, the likelihood is that there isn't a good mechanism for refinancing like there is with like a mortgage. Likelihood is people would pay off their PACE loan by taking out another loan at lower interest. But we have had people do that. We've had people like pay off their first PACE loan and take out another.
All right.
And because you're making payments slowly over time, it's not like it's doable.
Right. And the checklist is
there? Yeah. So I was just trying to think what's the best way to do that. I mean, there's almost, if you were going to say 3 questions, the first would be, is it a government property? The second would be, is it commercial? And then the third, right now, would be size. It needs to be right now. probably over $500,000 of a loan that people would need. Those three would be the first three but if you wanted to go a little bit further, we do have a button on our website that says eligibility, and it has probably 10 questions. And so you could yourself go onto the website and just go there and ask someone who you were talking to those questions. And I can also send those to you in a paper format. But the website asks the three questions, if they're not in a PACE district, that's not a big barrier, because if there's a project in a district that hasn't joined yet, it's very common for them then to join for the project. So like this is what's happening in Berry County, where there's a project that wants to use PACE. A private commercial property owner went to the county government and said, could you please look into becoming a PACE district? And now they're doing that. So that's not really a barrier, but it could extend the time frame by a couple months. So.
Thank you.
Yeah. Would you like it in a paper format, or are those two
Let me go to your
ideas?
site first, and then I'll just print that off, just so I have an
Yeah.
idea of what to ask.
Each
So,
page on our site has, a location where you can check eligibility.
okay, I'll do that. Thank you.
And the other thing that's kind of fun, I feel it's not quite immediately noticeable on our website, is if you go to the resources tab, the second choice is case studies, and that's where you can kind of look through those and see what kind of buildings have used PACE, and get ideas of what kinds of improvements they've made and what kind of size of projects, where they've been. That's super helpful too.
It looks like we have 3 more hands raised. I'm just going to go in order of what it tells me. So Alexis, did you have another question?
No, it's just not clearing out.
Okay. All right. Shar, did you have a question?
Yes. So who does the energy audits? Right now I'm working with Consumers Energy.
Yeah, we work with a bunch of different contractors. They just have to be able to do an ASHRAE level 2 energy audit. That's the industry standard, and that's a requirement in the state statute. So anyone who can perform an ASHRAE level 2 energy audit would be fine. People get their own energy auditors all the time. But if they don't have one, we can make a referral.
And then my second question is, my project replacing a 1972 oven for molding plastic is only going to be 200,000, so we don't qualify then, right?
Well, you do qualify. The problem we've been having is that we can't find lenders who are interested in the smaller projects right now. Minnesota and Wisconsin have cracked this nut. They have two banks and a credit union in each state who have sort of taken the step of becoming a PACE lender themselves. And they have a very strong interest in local businesses in a way that these national PACE lenders are not as likely to. And so we're working right now with like 7 different banks. Some of them are like, community banks that only work in a single county, and some of them are banks that have a presence in Michigan. Our number one strategic objective right now is to figure out who will finance loans under, say, $750,000, because originally, that's what PACE was designed for, was retrofits for small businesses. And now it's kind of taken this weird market turn. And so we're trying to press the market in a different direction by getting smaller lenders interested in PACE. Last year in Minnesota, a single credit union closed 175 PACE projects under $250,000. We want to do that here. But so far we haven't been successful. So I'll have to keep you posted, Shar.
Okay.
All right. Mary, I see you have a couple of questions in the chat, it looks like, as well. So I don't know if you want to just ask those here.
Oh, yes. I just wanted to say thank you so much. The presentation was really insightful. I just had a quick. I was just a bit. I may have missed it earlier in your presentation, but if hypothetically speaking, if the building is a government-backed building, how would the property security work? Would it be like against the building or the retrofit? I'm just, if you can kindly clarify that piece.
Yeah, I'm not sure what you meant about government backed. Can you say a little bit more about that?
Oh no, so I meant if the building is a government's building, because I think within um earlier during the conversation there was a requirement. I, the I just heard the building they I would need to check if the building is government, if owned by the government or commercial property. So I was just mentioning if the building was owned by the government, like what would that property, can the property be secured by the loan?
Right. So maybe for the reason that it couldn't be is the reason why government buildings are not eligible
Oh,
for
okay.
PACE in Michigan. Um, like sometimes like large government units will be renting a facility. So there'll be tenants in a building that's owned by a private or that's fine. They could do PACE, but if it's owned by the government because of the nature of this security, which is placing a tax on the parcel, Michigan does not allow local governments to take out PACE loans.
Okay. Okay. Thank you. And then
Yeah.
yeah, I just do remaining questions. How does I know this was sort of like alluded to earlier, and you mentioned there's a fixed interest rate on the treasury.
Yeah.
Does that would the interest rate change via lender? I'm guessing it probably would.
Yeah, I've tracked
And
the interest rates over the last 10 years or so. And, surprisingly, well, I guess that's why it's a 10-year T-note, is it stays a lot more stable than the mortgage rate. But right now it's kind of somewhere between 7.4 and 8.2 or something like that, which is way better than some kinds of business debt and not as good as subsidized money. So that gives you an idea.
okay. And does that include the private lenders interest? No, probably not.
Does it include their, I'm not sure I know what you mean. Well, so the rate is it's the interest rate that you would pay on, let's say you took out a loan of $1 million and you were paying, a 7%, and then you'd figure out, okay, $1 million with interest over 25 years and break it up into pieces like that. And the payments are twice a year because they're related to the local tax bill. So people pay, even though the money does not go through the local government, there is a time frame that's related to the local government tax bill.
Okay. Okay, sounds perfect. And I just wanted to inquire, how are the rebates start? How does the stacking work? Hypothetically. Yeah.
Well, so
how would the
almost every property already has a mortgage when they're going to look for a PACE loan. Even if they're new construction, they have already identified a mortgage holder. And typically the mortgage holder has a cap on what they're willing to lend. And so that'll be like the first part of the capital stack is whoever their senior lender is. And then, maybe they're going to get a grant from MEDC or from, MDARD or something. So that could be the next thing. And maybe they'll get a rebate because they put it in, let's say they put it in, LED lights. They might be able to get a rebate from the utility company. So that would be like a third layer in their financing. And then they were still, some hundreds of thousands of dollars short. They could finance the part of the building that's about saving energy and water with the PACE money. I mean, usually if you look at a property, and PACE is limited to 25% of the total value of that property, but typically when people do projects, there's way more that could be covered by PACE than is allowed to be covered by PACE. It's not hard to find things that PACE will cover, is what I'm trying to say.
Okay.
Does that help your question?
Yes, it does. Thank you.
Okay.
It looks like you had one other one in the chat from Brad. How does your program work with BRA TIF project? What has worked well?
We've probably had maybe 4 or 5 projects that have also had a brownfield TIF. We've had many that have had a historical tax credit. There's nothing in PACE that really affects those other things. So as people are planning how they want to finance, they'll be working with lots of different entities. At the end of the day, there is a PACE restriction that the property cannot be more than 90% indebted. So there has to be some equity. So if the mortgage is already at 100% of the property, then they wouldn't, a PACE lender wouldn't want to work with them. But if it's 90% or less, so there is a kind of a knowledge about what all the different pieces are to make sure that there is some equity in the project. I don't know if anyone knows of efforts that are going on that are looking for funding sources, or if people have ideas, either new senior living facility going up or a new multi-housing project or anything. I'd love to hear if if there's activity, economic development activity that might be PACE eligible in your area. I'm curious from what you all know. Everyone's so polite and they have their mute on.
I think Justin's the one that knows everything.
Yeah, Justin is a great promoter of PACE. He has sent me, a number of people my way. Either I've talked to them or my colleagues have talked with them, and I'm really frustrated because he's such a good supporter of PACE, but there hasn't been a project yet in Shiawassee County, so we've got to change that.
I'll say that we do have a couple of clients working on multifamily homes. So we can definitely follow up about and share this information with them.
That would be great. That would be great, yeah.
The YMCA is working on renovating their building, big capital campaign. And I do apologize. My team is on this, so I've only been half listening. So I will admit that. But we can, she's looking to do energy. She's renovating to add daycare. She's going to look at and try to do as much energy efficiency upgrades as she can.
Well, I think we've had, I forget if it's 2 or I think it might be 3. It is 3 YMCAs. So if she was interested, I could refer her to, some other people around the state that have improved their YMCA using PACE.
And then, I gonna say? Oh, and have you worked with the Restart program out of Lawrence Tech?
I have not.
Okay, they do energy efficiency. So they did an audit at the YMCA. So they've done that. And then we're looking at, and Char's on the phone here too. We're looking at some ITAC funding. She's going to apply to the Restart program as well for an energy assessment. I don't know if you ever cross paths with the ITAC people out of the federal level for energy efficiency. And I think that would.
Do I think, is that the same as LITEC?
It's industrial tech. It's some industrial, but it's basically for manufacturing only.
I see.
So you have to have energy. You have to spend over $1 million in energy a year.
Okay.
So this is for large manufacturers.
Okay.
And so they come in and do an audit of multiple waste streams. And so that's, I think, Char, and we can help her just evaluate whether it would be worth pursuing any funding and what comes back through her audits.
Yeah, no, that's a really cool thing, because it could be that if there's if the program is a source of funding, sometimes they have limits. So then maybe half of it could be done through them and half of it through PACE,
Mm-hmm. Yeah.
Any other questions?
It looks like we tapped them out, Jody.
I think so.
Oh,
Well,
that's
thank
pretty
you
good.
again, Mary. This has been great information. If anybody has any questions or you want to be able to reach out to Mary, let me know. I can definitely get you contact information. I think we'll probably share this video out. We've had some people ask who couldn't actually be on the call. So if you guys needed to reference it, I'm sure you'll have access to that as well.
Fantastic. Thank you so much for having me. And if anyone else is part of a group that's doing economic development and you think you have colleagues who'd be interested, I'm always happy to either come in person or do something like this or just talk to people on the phone. That's kind of what we do all day. So it's our thing. So
Thank you, Mary.
I really appreciate this opportunity. And thank you again for learning a little more about PACE.
Thank you. Thank you, everyone, for joining.
Thank you, Mary.
Thanks. Take care.